Well, happy Friday to you. Thank you for joining us today. Yes, I'm Marlon Bowling, your tour guide to the ag commodities, at least today yet anyway. I am pleased to be welcoming aboard the one and only Brian Hoops, the president of Midwest Market Solutions today. And he, of course, hails from Springfield, Missouri. And Brian, thank you very much for joining us today. I always enjoyed talking with you about what the markets are doing. Could you read anything into the market action that you saw last night?
Well, good morning, Marlon. Yeah, I don't think you can read anything into the technicals this entire week, let alone overnight or prior to today's report. You know, you've got a very narrow trading range for soybeans, about 12, 15 cents for the entire week. And we're no doubt will break out of that one way or the other, depending upon what the report says today. And I shouldn't say it's a report. It's about 6 reports all being dumped onto the market at one time. And that will definitely move the market because you have so many moving pieces in here, not only the final production figures from the corn and soybean growing season, but you also have first look at winter wheat seedings, ending stocks projections for the U.S., quarterly stocks projections, plus you're talking about South American production and very likely to see USDA lower Brazil soybean production, but they may increase Argentina's at this point. And then you also have world ending stocks. So there's a lot of things that will be focused on, and I think we'll probably be fairly quiet and dead going into that report, maybe some positioning, some option buying, and then the report comes out and we'll trade that for the rest of the day.
You think? Or do you think we'll trade it for 10 minutes and then that's it?
I think there is enough fundamental information in this that it could change some of these directions. I know a lot of producers are hoping that the corn and beans, which have been working lower, change direction and start to move higher. You know, it may happen for some time, but after today, then you're going back to South American growing conditions. And, you know, we've been hearing rumors that China is going to cancel some purchases of soybeans from the U.S. and from Brazil. In yesterday's export report, there was about almost 3 million bushels that were canceled. So some of that is starting to happen. And, you know, the weather looks just nearly ideal for Argentina, complete different situation than last year where they were having a drought and it forced buyers to step in and buy corn, buy soybean meal. We don't have that situation this year. We're going to have much bigger stocks to work with for both corn and soybeans going through the rest of the winter. So it really needs to have a bullish report. I'm afraid anything neutral to negative is going to take us the next leg lower.
Well, let's take a look at our prices overnight, shall we? We'll go to the Globex trade here. And we'll start with the corn. Our quotes are always provided by bar chart. So here we go. March corn now up 1.5 pennies, Brian, $4.59 overnight. You know, that's within a penny of our overnight high. That's not saying a whole lot, though. Look at that range. Only 3 cents from the top of the market to the bottom overnight. And December new crop corn is 0.5 cent higher. Man, that's exciting. We're at $4.9025. And I will give it this. It's just one tick from its high of the overnight trade. But again, very, very narrow trading range on the corn. Now on soybeans, and I will interject right here, Brian, I didn't see any overnight flash sales again today, right?
You're correct. There wasn't anything this morning, Marlon.
Okay, so I didn't know if I missed something or not. So nothing on the soybean sales or corn sales. But you had March soybeans now 8.5 higher overnight at $12.45. I thought that was kind of interesting. We're toward the upper end of the trading range. And the July contract, well, it finished about 7.5 cents higher last night. As far as new crop November, let's take a look there. It finished at $12.11.5, 4.5 higher. Well, how about that? It's over $12.10 now. Things looking a little better on the soybeans heading into that report anyway. And let's check out the wheat complex in Chicago wheat. We had March, look at that, 6 higher, 609.75 within a couple of pennies of its high of the overnight range. So looking fairly firm there, and it's led by the nearby contracts too. On the hard red wheat in Kansas City, March up 5.25 at 621.25. Wow, that was 7 cents off of its earlier low during the night. And on Minneapolis wheat, we had the March up 4.25 at 704.25. The cotton market this morning has March now down 6 points. We're at 81.30 per pound right now. Okay, we'll pause here. Brian, we'll come back and we'll talk about the livestock side and maybe some of these outside markets too when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions. I do want to take a look at the energy markets overnight. Intriguing stuff going on here, Brian. If we look at the crude oil trade, this would be your West Texas Intermediate crude. It's already trading, and February, well, when I came into work, it was over $2 higher. Right now, we're up $1.96, Brian. February, oh, there it is, $74 even right now. It got as high as $75.25 overnight. I understand that the U.S. and some allies did attack some Yemen airports overnight, and lots of hostilities. Sounds like there were some attacks on some more ships in the Gulf, so off we go, and there goes the oil market to the upside as well. If things really get heated up and just start cutting loose over there in the Middle East, what would that do to this market and the other markets that rely on this?
Yeah, you start talking about disruptions in the Middle East of possibility of either shipping oil or countries that have been sending oil out into the world. It really opens the upside for this crude oil market. So, typically 60 to 80 is our trading range. We could certainly move well above that $80 a barrel mark for crude oil, depending on how these interruptions occur and what logistics there are. But it's high risk to be short right now in that crude oil market because of what's happening. A lot of times it's happening while we sleep. And like you said, there was some attacks overnight, some retaliation, and things seem to be escalating. So it's not a time probably to be looking at the short side unless you're doing it with some low risk option strategies.
Okay, I want to take a look at our livestock setup for today. Another winter storm moving through the plains, and I believe another one yet coming on the heels of that. And the talk of the town has been the bitter cold that's going to be dropping into the plains and even in the deep south by next week. And here we finished yesterday with live cattle up $1.05 at 171.80. You think they're going to be able to build on that, or does that storm have to be a lot worse?
Yeah. The Packer bids raised from earlier in the week from that 169 area where they're trying to buy cattle real cheap, now back up to 173 and above in Kansas. That's going to be steady to higher. Some dress trade, just a handful, 273, pretty much steady. It looks like a kind of a friendly week for the cash markets that should translate into futures markets moving higher. This week is usually a higher week for cattle because of this week historically in the month of January, bitterly cold, a lot of snow, some ice, just miserable conditions for these cattle. And so we usually put in some sort of a premium or weather market. And I think that's exactly what we're seeing this year. I don't know that we can really build, several dollars worth on the futures here. We're pretty much in line with where that 173 cash trade is already, but Packer margins are definitely improving with the higher cutout values. The big concern, I think, is the lack of slaughter. We're 424,000 head this week. That's almost 80,000 less than a week ago. And next week we're going into a holiday shortened kill week again. So it'll be a little bit abbreviated, but that should mean higher cutout values down the road.
So on feeders yesterday, we did close with triple-digit gains all across the board. The March was up $1.27 at 227.40. We'll see what they do about that here this morning on the open. And then on lean hogs, we wrapped up the day yesterday just slightly higher. February by far was the leader. It was 52 cents higher. It closed at 72.60. That'll be our starting point for today. Well, Brian, again, thanks for everything. I've had a chance to visit with you about the markets for years and years now,
and
I appreciate that.
Thank you. So, I always appreciate talking to you.
Wish you all the best. Thank you. I hope you have a great 2024. Brian Hoops with us. He is with Midwest Market Solutions in Springfield, Missouri. So, Tammy, that's a setup for today's trade. We'll see how they want to open in about 5.5 minutes.